Hey there traders, welcome back to episode number 89 from the StockBandit.tv. It's a place you can find trading videos to make you better, and I'm really glad that you're here. Alright, so in episode 88, the previous episode, I began this mini-series about setting stop losses, and if you'll recall, that's really the most common question that I get asked by traders. So if by chance you happen to miss that episode, be sure and go back and watch it, because this episode is a continuation of that. Now, we were talking about different time frames and how that impacts the placement of stops. And we also talked about the behavior or the personality of the stock being traded and how that's such a major factor in choosing an appropriate area for, where to set an initial stop loss. So in this episode, for part 2, what I want to do is take the discussion a little bit further, and I want to make another important point on this. And that's what I'm going to keep doing as these episodes progress, is I'm going to keep building on this idea of setting stop losses and the placement of them, and so hopefully by the end of it you're going to have a nice good understanding of my stance on it. So here's the thing, and it doesn't matter whether we're talking about day trades or swing trades. In every situation for me where I'm going to determine a stop loss level, it's going to be based on the chart. That's what's causing me to get into trades. That's what's going to cause me to get out of trades. Now, the chart shows us where the buyers and sellers have been camping out, right? We end up getting support where there's buyers, and we get resistance where sellers are resting. So a lot of my trades are initiated when those levels finally get broken. And when all those buyers stop defending a level of support and they finally cave in, the stock oftentimes gets flushed lower. So one example of that is ATI. Here's a stock that was showing some recent weakness, really was unable to bounce, just kind of moved sideways, kind of drifted lower a little bit here. And this one actually undercut this 2750 level this week, and that offered a nice basis for a trade on the short side. So there's just one example of support getting broken, and therefore me initiating a trade there. Or when all the sellers at a resistance level get taken out by greater buying pressure, and the stock is now breaking out into new territory. I'm going to show you a different stock here, and this is going to be T-Rowe. The stock had been trending nicely higher, really settled into this range here, kind of a ascending triangle type pattern here, and this one offered a great day trade today as it broke through this 4680 level. That's a spot I've been highlighting to members at the StockBandit.com. And so this one busted through that level today, offered an awesome opportunity there for a quick day trade on the upside as it cleared resistance. So yes, there are going to be some head fake breaks of support and resistance levels when price clears that zone and then immediately reverts back to the other side of it. That is going to happen at times, and I can accept that as a trader because I'm managing my risk appropriately. But what's a stronger factor to me than worrying whether a head fake is going to occur is that the best moves are able to happen after those breaks occur. So that's my entry basis, okay? Obviously, I've spent a few minutes here talking about entries, but you're here to learn about stops. I wanted to set that groundwork first. Okay, when it comes to my initial stop loss placement though, I want to be sure that that breakout has absolutely failed, and it's going to depend on the pattern in question as to what's going to define that failure. So let me give you a couple of examples. Now, a tight pattern with consolidation can usually be outlined with a couple of trend lines. So let me show you another example stock today. This was Asia, and again, this is a 3-minute chart, and basically everything to the right of this vertical line that I'm drawing, this is all today's action. Okay, this is intraday price action for today. But back to my point, a tight pattern on the chart with a consolidation like this can really be outlined by 2 trend lines. And so that gives me a line in the sand for not only my entry, if this one gets cleared to the upside, but also my exit in case price happens to move down below that lower trend line. So in the case of Asia, this was a bull pennant pattern, or you could call it ascending triangle pattern. Nonetheless, the breakout was right here as the stock cleared the $20 level. That was resistance earlier this morning, and the stock pushed through that and actually offered a great move higher. If that had failed, I probably would have set a stop just beneath this rising trend line here. That's where that's a trend line that was serving as support, so a breakdown there would be about 1980 or so. Fortunately, that never came. I was able to actually book profits into this quick pop on the upside. This one moved a little over 2%, so that was a very nice move, and I didn't have to deal with my stop, but I knew exactly where it went on the chart because it was based on a failure of that pattern. Now, for a little bit larger base, I'm going to move to another example here and show you. This is CHRW, and I'm back on the daily chart here. I may not be willing in the case of a larger base like this. I'm looking at this big wide channel pattern here that's formed over the past few months in this stock. I'm probably not willing to offer quite as much room on the downside for a complete reversal of the pattern. So let's just take this stock for example with this channel pattern. A breakout would happen with a push up through the upper end of the channel, right? That's going to be a breakout, and that would be the technical buy signal for this stock. That's going to happen at about 55.25. But does this one have to fall all the way back down underneath this channel before I'm able to decide whether or not that breakout has failed? Well, absolutely not. And so in the case of a real wide pattern like this in a larger time frame, most definitely, what I'm more prone to doing in a case like this is I'm probably going to use the midpoint of this big consolidation area. Okay, so we've got this big channel pattern with these two white trend lines. I'm going to probably use that midpoint as my stop or my get out level in case the breakout happens and then reverts back and the stock falls back well into this base. Because typically when I've seen that happen, it's on its way back down, and I've seen enough at that point to know that it's time to bail out. So again, I'm always going to defer to the chart, not only for my entries, but absolutely for my exits and my stops. And I'm going to take note of the key areas, and I'm going to notice how price behaves around those areas, and then I'm going to utilize those for setting my stops. That information is right in front of me on the chart, and it's right in front of you, so why not use it, right? All right, thanks again for joining me here for part 2 in episode 89 for this stop loss series. I will be back soon with the next installment in this mini series and other videos for you. But until then, trade like a bandit.